Hello everybody, welcome to the fundamental analysis here with AvaTrade. My name is Troy, I'll be leading the session. Hello everybody, welcome to the fundamental analysis here with AvaTrade. My name is Troy, I'll be leading the session. As we get going, if you would, please just type OK in the chat box if you're hearing me clearly and seeing my screen all right. All right, great, I've got enough responses, thank you. If anyone has any issues as we go along, please just let me know. As always, as we get going, keep in mind that all trades have risk. It's something I think we all understand. There's no one trade that's guaranteed to profit. So you should think about managing your risk in a way that makes sense for your risk tolerance and for your balance, etc. And we'll go over some ideas and techniques for doing that as well. Also keep in mind that what we cover is meant to be educational in nature and not to be taken as financial advisement. We'll go over a feature on the web trader as well. It's AvaTrade's home-built platform, and it's also on the AvaTrade Go mobile app that helps for managing risk. It's called Ava Protect. It's a feature that allows for a small premium cost to protect against losses for defined time periods on specific instruments. So we'll go over that concept as well, that tool, as we take a look at the platform. So what is fundamental analysis? I know we get a mix of new traders and also experienced traders in the webinars. So some of you have a better idea maybe than others of how to utilize fundamental analysis with your trading. Real quick, what is fundamental analysis? It is looking at the news basically, what's happening in the headlines, the economic announcements, earnings reports, etc. There are a couple maybe driving headlines that we'll take a look at today that I think might be important for helping you understand which way the wind is blowing, so to speak, and which way you might want to trade with different instruments. And so we'll take a look at that. There are different types of fundamental news. We could break down into planned economic announcements, things that you know exactly when the announcements will be, what time, what the topic is, etc. And then there are other types of extraordinary economic events that bring headlines that you might not know when the headlines would come or what those headlines would be about. And just past examples were when we were getting breaking headlines every other day about Brexit negotiations, or more recently about the pandemic that's been occurring and vaccine development. And really, it can be any large topic such as those that could swing the markets. They can move things, and you have to be prepared within your risk management plan, and also maybe with pending orders to manage risk and also go after opportunities with news that you can't predict the timing of necessarily or the topic. So if you have any questions about things as we go along, please ask. You also are free to give input if you have a topic that you'd like to discuss that we're not covering. You're free to do that as well. So I always like to start on our website to show the features within our platform and mobile app that can be helpful for both your risk management and also your fundamental analysis as you go along. We've got some nice tools. So if you go to the trading platforms tab, you go to AvaTrade Go, you'll see our mobile app is in the major app stores you can put on your mobile devices. And it has the Ava Protect feature, which we'll look at more closely in a moment. And also the take profit, stop loss, pending order features are much more user-friendly. They calculate your exposures for you, your potential profit, your margin requirements. Everything in the order window kind of works like a trading calculator for you when using our mobile app or our web trader platform. So the mobile app you can find here. The web trader platform you access from this login on our main website. So just click login. If you've been with us for the past years, you might not have the web trader platform active. So just ask our support or your account manager to activate the web trader platform, and even our older clients then can have the new web trader platform that's been enacted in the past year. Most anybody who opened an account recently, you should have the web trader platform when you log in from this location. And that looks like this. So the chart you can slide, you can expand full screen if you want. you've got your favorites list, different categories to organize by. So, if I'm looking for something specific, I can find it just by searching with a keyword, and then I can bring up that instrument and chart. And quickly, to show you what I was talking about with the risk management, you see AvaProtect is available on gold, silver, FX pairings, and also we'll kind of look at managing the trade size and exposure, etc. So let's say I thought I wanted to trade 20 ounces of gold. Okay, and maybe I think, okay, that's relatively small trade size, 0.2. And I look and I say, okay, the margin requirement with the leverage I have on this account, and it varies across the globe with us. So your margin impact or requirement to open that trade size might be different than mine. But it shows you your margin requirement here for the trade size. And based on my balance, okay, I see I could easily open that trade size. Then maybe I say, okay, if I'm buying on gold, maybe I think gold's going to go up and shouldn't drop below, I don't know, 1750. So maybe I say my stop loss is 1750. If it drops below that, then maybe I would say, okay, I'm wrong with my move and give up on it. And my take profit, maybe I think it should go back up to 1850, for example. So I look, I see my possible profit converted to my account currency around 1120 or so, and my possible loss to that stop loss price, 877. So right away I can look and say, wow, I'm risking like half of my balance with that move. I can see right away, my equity is around 1600. I'm risking almost 1900. So right away, maybe I say, that doesn't fit my risk tolerance. So maybe I say, okay, let me cut that in half. 10 ounces. Now I see I'm risking 439 to my stop loss, which is more like a quarter of my balance. Maybe that's still too high for you, right? So you adjust your trade size to fit your risk tolerance, and it's immediately calculating your exposure, converting to your account currency. We'll take a look at that, Marius. Good question. Marius is asking about our advanced features through Trading Central that are available through this platform that we're looking at now. And so we'll take a look at that tab in this platform and look at those features to see exactly what's the difference between Forex featured ideas and analyst views. Good question. All right, so this is part of the risk management. You also could choose maybe instead of a stop loss, maybe you use AvaProtect or along with your stop loss for that matter. You can do both. But maybe I say, okay, I want to hold this trade for a day or two, and I see it only costs $43 and change, $51 for 2 days protection to protect this trade for 2 full days, which is a lot less than I was willing to risk with my stop loss if I think the movement will eventually go my way within this time period. And if it crashes and goes, it doesn't matter how far the wrong way, when this coverage ends, any negative floating gets added back to my account. Then I could put a stop loss if the trade was still running. So it's a unique way to manage your risk with AvaProtect. It's something you probably haven't seen with any other brokers. It's unique to AvaTrade and available on gold, silver, and FX pairings to protect your trade for a small premium cost. So that's something you might look at as well within the platform here. Now, how does the platform help you with your fundamental analysis, since that's what we're talking about in this session? So let's take a look. When you have a live account, Trading Central, all of these features in this platform are activated. Now, the economic calendar you can look at any time, okay, even on the demo accounts. If we click on the economic calendar, obviously that's fundamental news, right? And we can see what numbers have come in today, okay? And in general, there have been some positive numbers that have come in, especially out of the European Union on the economic announcements. Now, we have some other things here as well. Like if we go to Market Buzz, this is a great place for fundamental analysis. The bubbles that you see here in this pictogram, the larger the bubble, the more trending stories and trade activity is happening on those instruments. So we see GM, okay? We see Principal Financial Group. We see Google, Apple, Facebook. Some of the larger bubbles are commonly known. Others maybe not so much. If you have your MT5 account opened with us, if you don't, you can add it from your client area. If you only have an MT4 right now, a lot of these stocks you see are only available on the MT5. So you might take a look at adding an MT5 and trading more stocks if you wish. But we could quickly take a look and see, well, what's happening with Apple? And here are the latest headlines. Okay, so this is a headline that came in only 56 minutes ago. You can pull up to see what's happening with recent news on Apple to prepare for a potential trade on Apple. Obviously, once the US market opens, you could trade on Apple stock with us. So you might see something that you say, wow, that's good news maybe for Apple, or that's bad news for Apple. Take the time, take 5 minutes, read the article, right? And it's right there at your fingertips. You can quickly find this information with any instrument that's listed. And you know, how many articles have come in? Here's another one. Shares acquired by Maersk, Apple Incorporated. You start to read and become more knowledgeable than the average person about the instrument that you're reading about here. And to find all these articles on your own might be difficult, but they're right here lined up for you in the past hour. All of these articles were posted, okay, just on Apple. So we won't take the time to investigate all of these articles now, but you certainly could for the specific instrument that you're interested in. And many times I see Apple, Facebook, GM, Google are some of the most trending ones. Here's Tesla. Okay, boy, maybe Tesla is something you could be interested in. I don't know if you understand the connection with Bitcoin, but Elon Musk talked about, you know, investing a certain large amount of funds in Bitcoin, and that helped drive Bitcoin up. And you know, you can catch these breaking headlines right here. This was just an hour ago, involving Tesla and battery storage market, etc. Okay, and other articles that recently came related to Tesla as well. So, and Bitcoin's obviously being mentioned because of Elon Musk's comment not that long ago. So you can start to become an expert on specific instruments just using what we have going on this platform in terms of fundamental news. I have someone saying that there's no voice. I think it's just him. Let me type a quick message. Okay, just letting him know it's just him that has the audio issue. Type okay if you're hearing me clearly. All right, great. Thank you. I have enough responses. I just wanted to make sure something didn't happen as we were going along. Okay, so this is a great tool for fundamental news. Take your time, look for the instruments you're most interested in, and each day it can be part of your trading plan to check and see what are the latest headlines that are posted regarding the instrument you're interested in. It's a great place for fundamental news, and it saves you time. And I think we all understand that time is important when it comes to trading, time and timing. Okay, so the economic calendar and the market buzz are very good places to look for fundamental news. Now, there was a question about what's the difference between Forex featured ideas and analyst views. So let's take a look. I know the analyst views give you signals. Okay, this is more technical analysis now. All right, so the technical analysis is when you look at the charts, and it's important to combine that with your fundamental news, by the way. And our web trader platform makes it easy to combine your technical analysis with fundamental news, because we've got technical analysis here as well. You see on the dollar index, individual currencies, you'll see cryptocurrencies here too. We can switch between categories of what you would like to see information on in terms of signals. So we could go to ideas for cryptocurrency. There we are. There's Ripple as the most recent signal that came through. We see the technical analysis breakdown. It gives you the expected breakout move. It tells you entry prices, exit prices, support levels, resistance levels, what indicators were looked at. In this case, it's the RSI, the MACD. Everything is broken down for you here with the technical analysis. So if you're more of a technical trader, this could be right up your alley to save you some time. And it doesn't mean you can't open the charts and look at the chart yourself as well. But this could give you some headlights in terms of what instruments and signals you might be interested in. And then take a look at the live movement as well on the charts, which we'll do soon with some of the instruments. So very cool features here. Basically, I would refer to this as live signals coming in with timestamps. You get the timestamp here of when the signal came in. And just because it might be a few hours old or an hour old doesn't mean the information isn't good, because maybe the price level that is recommended for entry didn't hit yet. So the signal could still be something you might be interested in, and might not have crossed the price levels yet that are being talked about, even if it's something that's down a little further in the list. Okay. Then if we go to the other part, Forex featured ideas, what we'll see is you have some similar information. Okay, there's a chart breakdown, but this is set up more specific with the chart being expanded and some more advanced ideas for specific instruments to trade on. So you might see this as maybe a little more instrument specific and strategy specific with a more detailed breakdown on specific instruments. So, but there is overlap here. It's also basically a signal with a different type of chart and a different type of strategy maybe built into it. So you could take a look. In general, it's telling you it's bullish. It gives you an outline of what was found and maybe the expected movement as well. So this is something that you could make use of as well. And there's some overlap in that data, and I could understand why you might have asked, well, what's the difference between those? To me, the graphics is different. The strategy concept maybe is a little different, and you take a look and see what's most helpful for you in that regard. So what is happening fundamentally in the news with the major headlines? So you could make use of the fundamental news straight from our platform. It's more specific to the instruments that were trending, right? The bubbles that were in that pictogram to find recent articles on. Maybe they're instruments you're interested in, but maybe you were interested in oil, right? And oil wasn't listed in that pictogram. So you also can pull up major headlines. So real quick, we can see which way is the wind blowing for oil. Look at this headline: Barclays lifts 2021 oil price outlook on tighter U.S. supply view. We talked about that a while back. When the Biden administration took over in the U.S., what did they immediately do with energy policy? And if anyone wants to type, you can in the chat box. What did the Biden administration change about energy policy in the U.S.? More restrictive to fossil fuels. That's the general consensus of what's happening in the U.S. with their energy policy. More restrictions on drilling and for natural gas, for oil, not allowing new permits on federal land, etc. Also, shut down the Keystone oil pipeline coming from Canada into the U.S., on and on. So this is the direction that the Biden administration is going, is making it tougher for fossil fuel industry, making it easier for green energy. Okay, so that's a boost to green energy stocks maybe. And at the same time, if it's cutting supply of oil, what does that do to oil price? If oil supply is now more restricted with U.S. policy, what happens to oil supply? Goes down, maybe a stress on oil supply, which tends to drive prices up. Okay, so if also the economies are starting to recover with the vaccine distribution ramped up, and maybe eventually in 2021 economies opening back up in full or close to full capacity, the outlook then makes sense. That's why this headline is saying what it's saying. Expecting oil price to be lifted in 2021 on tighter U.S. supply view, and then you could also talk about maybe increased demand potentially. Okay, so US policy is driving the outlook here, I think, in terms of tighter supply view out of the US, less of an excess supply out of the US. And obviously that doesn't just affect the US, that affects the global prices of oil. So that's something that's interesting to look at if you're an oil trader. Before you jump on the charts, you want to keep that in mind, that this headline came out. Another one, global equity funds see jump in inflows despite inflation concerns. And you can find these headlines in 10 minutes. I found these headlines, okay, before we started. Global equity funds see jump in inflows despite inflation concerns. So right now, the equities, they're talking about stocks, indices, are climbing. They continue to climb, even though there are concerns about inflation. Now, why are there concerns about inflation? Just look at the next $2 trillion being handed out in the US as stimulus, free money being handed out. Nations around the world with zero interest rate or very low interest rates all around the globe. So cheap money, easy loans, free money being handed out to businesses, to individuals to try and prop up the economies, that leads to inflation fears, which really is a driver for gold to climb. But what's funny is they're saying equities keep going up, even though there are inflation concerns. Now, why would equities go up? Well, equities love free money. They love cheap money, low interest rates. That helps drive up the stocks, the stock market in general. So indices, stock market climbing because of easy money, cheap money. At the same time, inflation concerns are there, though. What happens, do you think, to the stock market when inflation concerns start to outweigh the happiness of cheap money? What do you think happens to all these rising equities? Yeah, the price could go down. It could go down quickly, right? So right now, the markets are still happy about the free money, about the easy money, about more stimulus coming in the US. And so stocks continue to do well, equities continue to do well, even while there are some inflation concerns. If the inflation concerns grow higher, grow quickly, have some ramp up in inflation concerns, you could see a sell-off in the market then. So as inflation concerns go higher and higher and higher, equities most likely have to pull back eventually. But right now, this headline says that's not happening yet. Equities are rising despite the inflation concerns. So that might give you a word of caution about how much further can the equities rise before there could be a pullback. Perhaps after the next large stimulus package in the US, and that excitement goes away about the free money, maybe then the inflation concerns take over. It's something to keep in mind. Carl, yes, a lot of folks might be waiting for the drop. I think there's still a little excitement to come in the markets with the stimulus until it's actually passed in the US. Then you might see, boom, big fears kick in. It's a possibility. So just something to keep in mind with the short-term view, happiness about cheap money, the longer-term view, inflation fears, okay? So if you're a gold trader, the longer-term view could be maybe there's a reason for gold to climb back up after all the dropping it's done of late. Okay, so shares and commodities keep climbing, so do bond yields. This is an interesting headline. We just talked about shares and commodities going up, okay? Oil going up on supply concerns and demand increases. Shares going up because of cheap money, low interest rates, making it a business-friendly environment. But the bond yields keep going up as well. So you think about that, as bond yields get higher and higher and higher, and inflation concerns rise, there could be a mass exodus from shares to buy bonds because bonds are guaranteed returns. And if bond yields are going up, it's because there's not a lot of demand for bonds right now. Banks are offering higher yields to try and get people to buy into the bonds. Okay? Yields are going up, prices are dropping on bonds to try and get buyers. If inflation concerns peak, you could see the opposite. If you start to see bond yields dropping and bond prices going up, that's a sign that there could be a sell-off in the markets. So keep an eye on the bond prices. Right now, the yields are going up, meaning there's not a lot of demand for them. They're having to offer higher yields to get people to buy into them. And so as the yields go up, they look more attractive, right? So if the yields continue to go up and inflation concerns continue to go up, eventually these shares and commodities that keep rising, investors could decide to buy into those yields. And when you see the yields start to sharply drop, that means there's demand going back into the bonds. That's a sign. If the yields drop and the price of bonds spike up, that's a sign that a market sell-off could be coming. Okay? So keep an eye on the bonds. Right now, the yields are going up. That's right in lockstep with stocks going up. Okay, stocks are going up. People are buying into the riskier assets, the stocks, and not buying the bonds. So the yields go up. The offering goes up to try and lure people into the bonds. But keep an eye on that. It's an interesting situation. If bonds start to hit, 1 year, 2 year, 3 year highs, something like that, the yields, it could be a sign that maybe folks will start to buy into those eventually, which could trigger a market sell-off. Okay, so headlines then, in general, what do we see in the fundamental news? We see overall positive headlines. Stocks are rising. Okay, the equities are going up still. There's low interest rates, business-friendly environment, and maybe more stimulus coming. But in the background, you have to keep in mind there are inflation fears that are continually, gradually rising. You see every day, every week in the headlines, something about inflation concerns being there. And so eventually, with enough stimulus handed out all around the world and low interest rates dragging on like they've done, even some with negative interest rates, you could see an eventual flip where the fears of inflation outweigh the positive energy of low interest rates and free money. Okay, so let's take a look then at the charts. And with that in mind, with the short-term view being maybe positive energy on the markets, and the longer-term view, if you're a longer-term trader, being maybe it's ripe soon for a sell-off, you keep that in mind for short-term moves, longer-term moves. All right, so we could look at gold first. In general, what does gold do if there are inflation fears? If inflation fears are gradually rising right now, they haven't peaked. Stocks are still going up, which means maybe gold's been dropping, which it has been. We're looking at a 15-minute chart. We see it's down today as well. Okay. What could happen to gold if inflation fears peak? Yeah, Carl, I'm with you. Gold could rise. Okay. Gold is an inflation safe haven traditionally. If the US dollar is getting too weak, which more stimulus would likely weaken the USD, you could see a rapid rise in gold again. Okay, so let's take a look at the bigger picture on gold. 1 hour candles, 4 hour candles, 1 day candles. That's interesting. So 1 day candles, let's even look at 1 week. That's even better. That view's even nicer. And I tend to do this, and traders in general should do this. Take an inside out look or an outside in look on the candles. Meaning if I'm starting on 15-minute candles, I'm also going to look at the 1 hour, the 4 hour, the 1 day, the 1 week, so I can get a better view. It's like if you're too close to a mountain range, yeah, you can see exactly what spot you might go into the forest where there's a small path to maybe enter. But if you back away and take a bigger view, you also could see that, maybe that path's not the right spot. There's a big cliff just in front, just past that, and you see a better spot to enter. And so you want the bigger picture view to see the bigger picture, but you also want to see the zoomed in view at the 15-minute candles right up close to the mountain range in that analogy, so you can then fine tune your entry point. But you want to see the big picture and the smaller picture. So especially if you're a longer term trader. For short term, maybe you only need to see that small pathway because you're going to get in and out before you reach the obstacle. But if you're looking longer term, you certainly need to look inside out or outside in on your view. And it doesn't hurt even for short-term trading to know that that larger obstacle is just a short ways away. Yeah, Carl, it's easy to go in early to anticipate something happening before it happens. It's okay. If you have limited risk, you can take multiple shots at it, and you're only losing a little, and then boom, when that big move comes that you're anticipating, you make 10 times what you lost on those 3 or 4 shots that you went in with a limited risk. So it's okay. I mean, you got to be in it to win it, right? You can't not enter and then say, oh, I should have entered. So you got to take your shots, but you have to manage your risk as well. All right, so right now I'm looking at gold on the weekly candles. That's quite a support level, down around 1760 or so. Okay, I drew at 1771. You see the wicks came down around 1757. So it's right around this range. I could create a little zone with 2 lines. Okay, the wicks came down to there, the recent dips to around 1750 plus, and the support level is somewhere in here. Okay, somewhere in between these 2 lines is the support level on the 1-week candles. That's a significant support level when you're looking not at 5-minute candles, but at 1-week candles. So this was resistance all the way back to March 2020. It was a resistance level on the 1-week candles. Then once it broke above on the 1-week candles, it became support right here. Support once, support twice, support 3 times, and bounced. So a longer term move on gold would be something like looking at the 1-week candles and saying fundamentally, we expect more stimulus very soon out of the US in the trillions. That tends to weaken the USD and cause inflation fears, which we already know are in the background on the headlines with our fundamental news review. So for gold traders, the longer term view based on the fundamentals of weak dollar and inflation fears rising would be to buy on gold. Obviously, there's no guarantee you'll win, right? So you have a risk management plan that you say, okay, let me put my stop loss below the major support level. There. Now I'm below the 1-week candle support level. And we're talking from my entry price of 1789, my stop loss 1740 approximately, about $50 per ounce, right? So then you have to look at, if I'm putting my stop loss $50 away, how much do I want to risk? And the web trader makes it easy. You put your trade size, your stop loss price, and it tells you how much you're risking. You can adjust the trade size then. So, but in general, if you do 10 ounces and your stop loss is $50 away, you're risking 500. The number of ounces in your position times the distance to your stop loss in dollars tells you how many dollars you're risking. So in this case, if my stop loss is about $50 away and I have a trade size of 15 ounces, 0.15 lots is 15 ounces, then I'm risking 750 approximately to my stop loss. 15 ounces times about $50 per ounce to my stop loss. Okay, and the web trader does that calculation for you, as does the AvaTrade Go app. Just put your entry price, your stop loss price, your trade size, and it tells you what you're risking, and you can decide what trade size would be right for you. So now this is a long-term move. In this situation, I don't care so much about the 15-minute candle support level. It could break this little low point here from earlier this week. It could break 1784 and drop to 1775 or something. I don't care if I'm in this for a longer term move. Okay. I expect in the next week or so that maybe the US will pass a large stimulus package, which should work in my favor to drive gold up, fundamentally speaking, right? Obviously, no guarantees, which is why we managed our risk with an appropriate stop loss. But short term, I expect this could push and break this low point. That's not what I'm about with this move if it's a longer term fundamental type move. Okay, so we're looking at 1-week candles on this type of setup. Then we say, okay, if inflation concerns hit and all of a sudden bond prices go up and the yields drop and the sell-off begins, if that happens, then gold, why wouldn't gold be able to come up to a recent high? like 1900, which would still be a larger potential profit than what you're risking. So if you take profit before the resistance level around 1900, that's like 2 to 3 times the potential profit compared to what I'm risking. Or I could say, I believe it'll go to 1950, which was a recent high. You see, that's a nice resistance level right there. 1 week candles, resistance, drop. It tried it a second time, resistance, and dropped. So if there's a big buy into gold again, it easily could test that resistance around 1950. So now we're talking potential profit, what, 4 times what I'm risking, even more, okay? So Lolu, what we're looking at here is not the technical trend as much as the fundamental news situation. It's a fundamental analysis webinar, right? So you're saying I'm going against the trend on 15 minutes or on 5 minutes. Yeah, 5-minute candles, look at the downtrend. 5-minute candles shows downtrend, but the technical analysis on the 1 week candles shows a support level that was respected, okay? So we really aren't going against the trend. We're going against the short-term trend. If you look at the longer-term trend, we see a support level that was confirmed just this past week. Last week, it tested a support level, the old resistance level here. Support was confirmed here months ago, and then just last week, the support was confirmed again with a bounce back up off that price. So if we're looking at the 1 week candles, Lolu, I would say we're not going against the trend. We're going with the trend of a bounce off of the support level. The trend is support level, bounce up, support level, bounce up. Okay? The short-term trader, and that's exactly what I said, Lolu, was I probably would be selling if I'm scalping. If I was doing a sell, I would have already made profit. I would have sold from this little resistance up here because right now stocks are rising. Inflation fears are not driving the market right now. And so gold is dropping in the short term. So my short-term view would have been sell because it had not reached this support level down here. You see this little support level here? Here's a support level. It's trying to touch this support right now. So as we opened the buy position example on gold from the 1 week candles, that's exactly what we said. It easily could drop down to this support level or even break it in the short term. So 2 different strategies. Selling on what you know right now with short-term moves is the move is sell for sure on a short-term scalp. The bigger term move at the same time, you could be selling on gold in the short term if you're scalping short moves. You could also have a longer term move set up in the opposite direction based on the larger fundamental picture that you feel is coming inevitably in the next week or 2. Okay? Because that headline could hit now. That's why you open the buy position example now. Even though the short term is downtrending, you know that headline could hit today that US agrees on stimulus deal for $2 trillion. If that headline hit right now, what would happen with gold? You might miss the movement on the bounce further up, right? So a little bit of insight or forethought to anticipate the fundamental news that you think inevitably is coming, which is a weakening of the USD with $2 trillion in stimulus coming and maybe more inflation fears. Very good point, though, about the short-term trend going the opposite direction right now. Okay, so what else can we look at then? Other than the long-term view on gold looks like it could bounce up further, and the short-term view on gold, strong downtrend, right? And it's reaching for this support level right here, down around 1784. Likely you'll get a bounce. If gold hits this price, this support level, you'll likely see just like this bounce here when it hit this price, even if it's going to break the support level and keep dropping, you might take profit here on a scalp on the sell because it's likely at this price going to bounce some, even if temporarily. It'll likely bounce up, and then if it's going to break that level, continue down. Okay, this is a short-term support level right here. So as it gets near there, if you're scalping, that's probably the first spot you consider taking profit on the sell position, short-term move. Our longer-term move, it shouldn't even phase you that this has started in the wrong direction. We even highlighted that it probably would before we simulated the longer-term move off the 1-week candles. Okay, so what about indices? We see indices are pulling back a bit after a surge up yesterday and today. So we see the big climb here rapidly. It consolidated and it's pulling back, correcting a little bit today. Okay, so if we look at 4-hour candles, you might say this isn't a spot that I would want to buy from because it's a pretty strong downtrend if you're talking about short-term move, right? And so you might be patient if you anticipate stimulus coming, which would drive indices back up, right? You might be patient for any inflation fears that could be kicking in now that could drive gold up now. If inflation fears are starting to kick in, you could see these equities pull down, the stocks and indices pull down. And so we're looking at a support level right here, okay? You see this was old resistance, resistance, resistance. Once it broke above there, that has become support. Support, tested it once and right back above, okay? So this is a price that if you believe in the short term, stocks, indices could pull down further, which I believe they certainly could. Then you could be looking to buy from a support level that you trust, maybe down here, okay? So a pending order on US 500 could be around 38.70, for example. So if I think in the short term there could be a pullback here in the indices, and I want to try and catch a support level to buy from, anticipating that maybe soon there will be stimulus to drive the equities back up. So I do a pending buy limit, which buys from a lower price. And I put 36.70 as an example, with my stop loss just below there. So I'm sorry, 38.70. With my stop loss just below there at 38, maybe 50. And my take profit maybe back up at the high, because if 2 trillion in stimulus passes, likely the indices will try to test the all-time highs. So maybe 39.50 wouldn't be unreasonable to think could happen. Okay, so there I'm set up. I'm ready for the market to pull back, which it's doing now. The buy price is just above the support level. My stop loss is just below that support level. So if it breaks the support, then I'm out. Maybe I cheat that stop loss down just a little bit to get below these wicks. Let me clear up the chart so you can see the actual entry price and exit price and such. We'll delete all the lines that I drew. And there we are. So this green line is the entry price, just above the support level. This is my stop loss down here and take profit up here. So if I want to adjust my entry price closer to the support level, I can just play with it a little bit there. And then I can have a little bit larger potential profit just before the all-time high up here. So we're looking at support level. I'm risking from my entry price here, if it hits my price, to my stop loss here, I'm risking about 1/3 of my potential profit. So I could try this again. If it hits my stop loss, I then could re-enter and go after it again with the same sort of setup. And I would only need to be right once out of 3 tries and I could still profit, because my potential profit is 3 to 4 times what I'm risking from this entry price. So because it's a strong downtrend, you might wait and look for a better entry price if you're looking to buy on the momentum that could come with more stimulus. Okay, so in the short term, could you sell here? Certainly. Looks like there's a bit of fear hitting the market and a little bit of a sell-off, but I kind of like the idea of being patient and waiting for the right price to get in, to go in the direction of the inevitable fundamental news, which is more stimulus. So I don't like to trade against the fundamental news. And the fundamental news, we believe, will be positive with stimulus passing eventually here. So waiting for a good entry price to go with the fundamental news looks like it could make sense with an entry price maybe down here somewhere on a pending order. Okay. All right, let's take a look at Usdjpy that's been requested, and then I think we're about out of time. Sorry, I know there were some other requests, but I do my best to try and hit all of the instruments. Okay, so USD climbing against the yen. That shows that there's some fear hitting the market right now, right? Those are 4-hour candles. USD went up, 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 up. Look at the 4-hour candle resistance here. Wow, is that a nice entry? And so what do you do on USDJPY if you want to sell? Okay, if you want to sell on USDJPY, simply from a technical analysis standpoint, there is a resistance level right here. So I put my stop loss here. This red line is my stop loss, just above this resistance on the 4-hour candles. Now, fundamentally speaking, what happens to the yen if fear hits the market? What happens to the strength of the yen if fear hits the market? We start to see the equities are selling off a little right now. And we anticipate gold could climb. What happens to the yen if that happens, if fear hits the market? The yen is considered a safe haven currency. It tends to strengthen when there's fear on the market. And if stimulus passes, what happens to the strength of the USD? Tends to weaken with stimulus. So you have a couple fundamental stories backing up this type of entry point to sell on the USDJPY. USD could weaken with stimulus. Yen could strengthen with fear. So you've got a couple things that could be in your favor to take the move that we just did, that we just simulated here. So yeah, yen tends to go up, but it's paired second, right? So the yen tends to pull down what it's paired with if fear hits the market. The yen tends to strengthen, so USDJPY, if the yen strengthens, USD would drop. Also, if stimulus passes, USD should weaken, so USDJPY might drop. So there are a couple different things there, fundamentally, fear or stimulus, that could cause the USD to drop against the yen. So then take profit, depends how patient you are, right? Take profit could be here. This is the first support level. We see resistance here. We see resistance here. And it became support here, support, support. So this is a bit of a resistance / support level. So if we're selling, take profit just before that level. If you're scalping, might make sense. Okay, and still we have about double the potential profit to the first support level here compared to the risk just above the resistance level there. So this is more of a scalp type move. You're out at the first support level here, and you give up if it breaks the first resistance level. Okay, so just kind of a short-term move. And if we zoom in 5-minute candles, you see that resistance. Resistance down, resistance down, resistance down, testing the resistance again right now. Okay, this is where we drew the resistance on the 4-hour candles. It's a little bit higher. So we saw resistance on 4-hour candles a little higher. So it wouldn't be surprising to see this test this price level, which is where the larger resistance level shows on the 4-hour candles. So if it tests here, I wouldn't be surprised if it tests this level before it might drop further. Okay, which is why on the 4-hour candles, we put the stop loss above these wicks on the 4-hour candles, which don't show on the short-term view. So this is a nice spot to get beyond not just the resistance on the 5-minute candles, this shorter term resistance, but beyond this resistance level, which is not on the screen on the 15-minute candles, but on the 4-hour, we see resistance here on the 4-hour candles. So stop loss is above that, okay? So Very nice setup technically here, and the fundamentals could be on your side here with a move maybe to short on USDJPY with the risk not nearly as much as the potential profit in this setup. All right, everybody, thank you for joining. We've been going for nearly an hour here. We talked about oil having bullish headlines. So we could look at Brent oil. There was a quick request. You see it's an uptrend on the 4-hour candles. The fundamentals already told us why. We already know. And those, by the way, those fundamental headlines about supply and being cut in the US and demand being up have been there all week. So you could have been buying on oil all week just strictly off the fundamentals and had great success. Now, we see a pullback in the price. You might draw a line and say, okay, fundamentals are with oil climbing, especially with stimulus potentially coming. So you could pick your price. Either you buy now if you like the price, or you say if it hits this support level, I buy, or if it drops to this support level, support up. You have to find a price that you like. The fundamentals say buy once you get the price that you like on oil. Okay, so in the short term, commodities are pulling back a little bit right now. So are the indices. But the fundamentals say in the near term with potential stimulus coming that commodities and stocks could bounce back up near the highs again. So you got to pick your price on oil. If you think the fundamentals say buy, you got to find the price you like. Either you're less picky and you could buy with market price now and put your stop loss below a couple support levels, or you wait with the hopes of catching a better price before you buy. Okay. All right, everybody. Thank you for joining. Good luck with your trading between now and the next webinar. The next webinar is on Tuesday evening at 6 p.m. GMT time. All right, everybody. Thanks for attending. Bye for now.